All right, Bulls and Bears, we're back. We're back with another dose of economic reality. Everything's getting crazier, wilder as each day progresses. We've got the fake debate going on tonight. I'm sure as I'm playing this, as you're watching this, it's probably on. So many people are probably not going to watch this video when it comes out, but you might be watching it later tonight when it comes out because the debate is supposed to be very widely watched between the former president and the current president. And I think it's going to be one of the most widely watched debates ever, right? So we'll have to see how that plays out. Um, Unfortunately, I don't really think either one, win or loss in this case, left versus right, is going to really matter much. There'll be some differences, but when it comes to the economy, you're going to see more inflation, rising prices, unless somebody pulls the plug on this money printing. But speaking of money printing, I'll start right here. This is how the headline reads out of USA Today. I just want to read some stats out of here, but here's the headline: Ballooning U.S. budget deficit is killing the American dream. So basically, they're admitting it. The more money they're throwing at this, the more money they're just creating, borrowing in this case. We don't even print our own money, we borrow it from a private bank known as the Fed. The central bank is a private bank, not part of the U.S. government. It's really no more federal than Federal Express, as many have put out there, has put it. Listen to this. Last week, the Congressional Budget Office raised its estimate for government deficit this year by 27%. And that's over $400 billion over its forecast that they had in February. It's up to $1.9 trillion now. This is going to cost everybody. It's going to cost everyone watching this. It's going to cost your kids, grandkids, if you have kids. I mean, this is not going to be getting any better, again, unless something happens to where this entire uh, economy comes crashing down. And I know a good chunk of my audience here, a good percentage of you, want to see a collapse. You want to see the entire financial system come down, which I'm laughing because that would be really, really dangerous. However, in the long term, I think it would be better. I think it's worse to have this slow, steady inflation that never seems to end. And I think that's much more dangerous in the end because it's much more incremental and it's much less noticeable. So it makes people very complacent and it makes people not even question, what's going on. They just assume that inflation that never ends or never stops rising, they just assume that's normal. No, it's not normal. Right? When people are tapped out financially, we're supposed to see deflation. We're supposed to see falling rents, falling home prices, falling car prices. Right now, it's just the opposite. All the games, all the shenanigans, all the ways that are being done to keep asset prices propped up. And that's part of the spending, that's part of the deficit, that's part of the money just created, and that's part of the debt. That's why you see $100 trillion altogether in debt, which includes the national debt, state, local government debt, individual U.S. consumer debt. And if you look at the derivatives with the banks, it's in the hundreds of trillions of dollars, folks. Without all this shenanigans with the money created at the click of a mouse, you wouldn't see this type of cost of living. You would see everything much, much more affordable. In fact, when money was still backed by gold, think about this: people had to have the money to buy things. They couldn't as easily borrow money. Yes, there were still mortgages back then, but back in the early 70s when things were still affordable, the reason for that is because the currency was backed by something, right? It was either partially or fully backed by gold up until 1971. Then it came completely detached, and that's when inflation, if you look at a chart, inflation started ramping up big time, after that happened in the early 70s. In fact, why don't I just give you a little bit of proof? All right, here's a chart of the consumer price index. Now, we know this is way too low, but it's always been incorrectly calculated. In fact, it's gotten worse, but here we go. Follow along here with the arrow. And I'm right here, early 1970, 71, in fact, when the gold standard was taken away. Look how much faster CPI began to rise after that. Before that, it was pretty steady. I mean, it was going up, right? It was going up, but it was much more flat. Boom, 1971, skyrocketing. And then again, 2020, exploding higher, right? Consumer price index. What do you think the cost of things would be right now if we still had a limit on the amount of money that we could just throw out there, helicopter money, right? Some people describe it as dropping money from a helicopter money, money printing, some people call it. It's just digits on a screen. It's actually worse than money printing. They don't even have to print it anymore because it's all digital, mostly digital. 90% of the money out there in circulation right now, it's not even money, it's just digits on a screen. Then, of course, the other 10%, 9 or 10%, coins and dollars, also that are not backed by anything, right? So that's why people are running to hard assets, precious metals. We see the BRICS nations talking about, in fact, there's going to be a summit coming up this summer, and the BRICS nations are talking about, it's not guaranteed, but talking about making the move to a gold-backed currency. Now, right now, it's just talk. We don't know if it's going to happen, but what's going to happen to the dollar and what's going to happen to inflation if that gets announced and implemented this summer, right? That's why I say be ready for anything, folks, because something big could happen here if that's announced. You think inflation's bad now, hold on to your seats because it could get a lot worse. All right, but let's transition a little bit here. I wanted to bring up some other news here. The data breach out of the Fed, like I said yesterday, it's confirmed. They're trying to get the central bank now to pay up to avoid putting out this data. So what they did is they actually released some data. Now, I don't have the stories or the data that was released because a lot of people haven't even looked through it. I'm not sure actually where it's even released at. But the bottom line is you may see some fireworks go off if we find out, there's been some shenanigans there, with the central bank. Listen to this. This is a mind-blowing thing here. Reuters. U.S. banks weather the Fed's annual stress tests. So all the banks passed the stress test, even with over $500 billion in losses, unrealized losses on the books. Folks, this is similar to what we saw in 2006, 2007, 2008, before the financial crisis. Remember, all the banks back then were AAA rated, or A++, depending on what rating agency you're looking at. This is a joke, people. The banks weather the Fed's annual stress test. Absolutely ridiculous. You and I know that these banks are only alive right now or operational right now because of the zero money requirement. Again, they can click buttons, loan out money. They don't actually have to have any money in reserves. The housing market is stuck until at least 2026. That is a warning from Bank of America. Basically, they're saying no volume, right? Hardly anyone wants to sell their home. Why is that? With home equity at all-time high, home prices at all-time high, you would think sellers would be rushing for the exit, rushing to cash in on selling the home and getting all this equity. Why are they not rushing to sell and get all this equity? Because rents are not cheap anymore compared to homes. It's a little bit cheaper on average. In some areas, not as much. But it used to be a lot cheaper to rent. And people that sold their homes had the option of selling their home, getting the equity, and going and paying rent somewhere for a lot lower of a monthly cost. Now, it's not much of an option here. Sure, if you move from California to Tennessee, you're going to be paying less. But if you're staying put in your area, rent is not that much less than owning a home. But then the people that want to buy a home because they figure rents are also expensive, so why rent when you could buy a home? It's so outrageous right now. I read that the median down payment that people need is $120,000. How many people have $120,000? It's not most of Gen Z, it's not most of Gen X, it's not most of the millennials, right? It's the baby boomers mostly. And as you know, it's the big mega companies, the investment firms, the hedge funds, the big business, big money, right? The top 10%. That's the sad truth, folks. A lot of people are locked out of the housing market. So here's how they put it. Bank of America said the housing market is stuck until 2026. No surprise to any of you. All right, let's move on here. A couple other news items I want to put out there. Again, no surprise that this is getting worse. We saw this start to uptick at the beginning of last year. Americans are falling behind on auto payments at a record pace. That's, you may say, not new news because it was already a record pace last time we looked at it, but it just got worse. Let's read off some of the numbers here. Again, people say I'm doom and gloom and that I'm exaggerating when I say it's going to get worse. No, it's going to get worse. Nothing's being done to stop this snowball from rolling down the hill. They're just throwing more money at the problem, so of course it's going to get worse. They're not allowing prices to correct because nobody in power right now, none of the powers that be, none of these people want the economy to come down on their watch. And when you see deflation, that starts the snowball of the economic downturn. They don't want deflation, right? Let's take a look at this here. A snapshot of the new struggles on American consumers to keep up with their bills. The rate of subprime interest rate borrowers who fell behind 60 days or more on their loans hit 6.11%. That's the highest since 1994. So if something's at a 30-year high, is that a sign of a strong economy or a strong consumer? The subprime borrowers getting squeezed. Remember, the subprime borrowers, even before the rate hikes, they were paying 13, 14, 15% for their auto loans. A subprime borrower now taking out a new car loan at today's rates, you're talking 16, 17, 18%. We're getting up towards like the credit card rates where the rates for credit cards are, right? 20 something percent in some cases. Absolutely ridiculous. So at some point there will be a tsunami of repossessions. Cox Automotive estimates that 1.5 million vehicles will be repossessed this year, and that's over 300,000 more than 2022. You would think our prices would really be coming down with this many repossessions, right? What we're seeing, though, and we've talked about this, what we're seeing, a lot of car dealers are using this vacant commercial real estate, vacant building and parking lots to put overflow vehicles on these other lots, so they don't feel as much pressure to liquidate these vehicles because they're not running out of space. In fact, all the new space that they have available to lease now, all these empty parking lots, empty commercial buildings, gives the car dealers a way to not cut prices because they have, again, a bunch of places to put these vehicles, so they're not as desperate to cut prices. That's why we see wholesale prices coming down much faster than the actual prices at the car dealer lots, right? So if you go in, you're not going to get the same decrease or lower price on a vehicle than the vehicles are paying at the auctions, at the wholesale dealers. Right, let's move on here. Next, let's go over to Forbes. Forbes, 60% of employers plan more layoffs. Why? Again, if the economy's strong, if what we're told is true by the talking heads, the powers that be, the bankers, etc., why would 60%, most employers, 60% of employers plan more layoffs? Doesn't make any sense. The economy's strong, the consumer's strong, right? According to some, consumers can take on endless amounts of debt, right? And that's what people are wondering. They're wondering, where's the breaking point? Why do we still see restaurants packed? Why are amusement parks packed? Record travel. Every time we looked at it, I just saw another news bit that 4th of July, record holiday travel. How much further debt can people go into? Well, we talked about that, one or two reports ago. Only 20% of banks are tightening right now. Right? The other 80%, not only are they not tightening, they are loosening. They are allowing people to go further and further and further into debt. And what people are doing is they're playing, basically shuffle the debt, right? Pay the debt off with a balance transfer. Let's say you get 0% for a year, 18 months if you're lucky. Roll over that debt. Balance transfers are really, really big right now. In fact, there's some recent data out there about that. All right, and this is the answer to the people asking how people are still getting by. Take a look at this here out of payments. 65% of financially unstable customers revolve credit card payments. In other words, they're paying off one balance with another one. They get a low interest rate, maybe 0% for 12 months, sometimes more. Then they're rolling it over again. But instead of the balances getting smaller, they're getting bigger and bigger. So people are shuffling money around right now to get by, right? People don't want to stop spending money. They don't want to stop traveling. They don't want to stop going to concerts. They don't want to stop going to clubs and bars. They don't want to stop going to eat at restaurants. But if you took away the money, the system of money right now that says we can just create or print as much as we want, most bars, most restaurants, most airports would be not completely empty, but I would say 90% of the people that you see out at these places spending quote unquote money, I'd have to guess 90% of them would be at home saving money. That's how big uh, it is. When you look at the spending, that's how big it is, the way that money is created, right? That's why you see the BRICS nations doing what they're doing. They know that this is not sustainable. And why are they taking printed US dollars for actual goods that we get imported? We import most of our goods here. We don't really manufacture much. Even if we did, are the manufacturing jobs that good? A lot of people that work in manufacturing now still can't keep up with the cost of living. People working at the automobile plants. That's why you see strikes all over the place, right? How many strikes did we see this year? It's already in the hundreds. Different strikes, right? Automobile, airline workers, restaurant workers, um, medical workers, hospital workers. I mean, strikes all over the place. People aren't making enough money. Even manufacturing jobs aren't paying enough now. But yeah, 65% people shuffling debt around to get by. So there's another piece of the puzzle, to those of you that are trying to figure out how people are getting by. All right. Hope you guys are doing well. Hope you're staying ahead of the curve. We're still looking pretty good on our short. For those of you that didn't see, I shorted Nvidia on the day that it hit the all time, not the all time high, but the year high, maybe an all time high. Yeah, the all time high. It did take a jump back up. I said it might be a double top. We'll see if it continues to go up. Maybe I'll take another short position out on it via put option. But I've got another stock that I'm going to be shorting, meaning expecting it to go down. We'll talk about that here in just a few minutes. But I got a couple more news items that I want to get into. But for those of you that are traders, you may just want to stick around and listen to this next trade I opened up. Here's something else, folks. This is so important. Another question that people ask a lot: how are we gaining all these jobs? Folks, first of all, if you go back a few months after the jobs numbers come out, you usually see that they're backwards revised. In other words, they're giving us false numbers to begin with. And then a couple months down the road, when people have forgotten about the report, they're looking at the new monthly report. They don't look back at the revised one that usually goes down. In fact, all of California jobs in 2023, all the job gains were false. They were phony. We found out that actually we had a net decrease in jobs in California last year. So not just zero growth, a decline. So it's really bad. But here's something else too: government jobs. Why do you think so many people want government jobs? Look at this: 80% higher benefits for government workers. That's almost twice as good as the typical benefit package. 80%, right? 100% would be twice as good, or double the benefits, double all the perks and bonuses and deductible options, and 40% higher pay on top of that. So it's no wonder that a big portion of the jobs added are government jobs, right? And again, it goes back to the money. When you can create all this money out of nothing, you can just take on further debt, borrow more money to pay workers more. But what about the private sector people? What about the business owners, right? Self-employed. It's hard to compete with government jobs, and that's one of the biggest sectors that's growing right now is government jobs, because they can just create all these jobs that really don't end up doing anything. A bunch of paper pushers, a bunch of button pushers, IRS agents, etc. People that really don't produce anything, right? It's outrageous, folks, right? But here's what I am trading. Let me just bring up the stock here for you. Well, I probably shouldn't bring up a screenshot. Let me just tell you here what I'm shorting. For those of you that are trading, if you're not a trader, you might not really care about this, but a lot of people are actually asking, okay, the news is bad, the economy's crazy, how can we benefit from this? Here's how you can benefit. Here's one way that I'm doing, and I'm not saying you should do this, but I'm shorting Rivian stock. Rivian just exploded higher here, but a few days ago. This is an electric vehicle company based out of California here, I believe Orange County. The stock just went up a lot here. Let me just bring it up. As of this month, the stock was $10.26. It jumped up to $15.54, folks. That was about a 50% increase. It since dropped to $13.60. It jumped back up again to 1450. Here's where I am shorting because I think electric vehicles are going to become less popular. I think the initial surge in gas prices created an unusual and unnatural and unorganic surge in demand for electric vehicles. But people are seeing now that electric vehicles, they have some downsides to them, right? In some cases, it's saving people money, but there are some downsides, right? So I think the mania is subsiding, and we see that. But a few reports ago, we talked about all the vehicles that are what they call a Tesla graveyard, right? So many unsold Teslas that they have all these what they're calling graveyard lots for all the vehicles. So Rivian, we're going to be shorting that. My put option doesn't expire for quite a while. I've got until September. So I think it's going to go down between now and then. The previous spikes that we've seen in that stock have been very short-lived, 1 to 2 months after it spikes up. It typically starts coming back down, right? So we're probably going to make some money on that. That'll be 10 or 11 in a row stocks, trades that I've came out on top. And that's because I'm very careful about picking what I trade, right? To me, I think it's going to be a win-win situation here. We have to see how the NVIDIA short's going to go. I think that's going to be a win, though. So everybody, hope you guys like this report. What do you think about all this? What do you think about the crazy numbers that we saw at the beginning of this video? The 65% of people shuffling debt around, balance transfer, balance transfer. Now you know why people can still go out and shop, even with the amounts of debt that we're seeing right now, folks. All right, we got a lot of big news to catch up on next report. There's so much out today. I didn't want to put it all in this video. It would have been about a 35-minute video if I'd had all the news out today. So make sure you're subscribed. Stay tuned and come back tomorrow for another update. We'll see everybody very soon. Keep stacking. Bye for now. Peace.